Hedera enters HederaCon with enterprise momentum and a weak HBAR chart pulling in opposite directions. How high can puts the focus on enterprise headlines are strong, but HBAR was still trading below its 200-day moving average. The confirmed detail is that HederaCon opened May 4 with tokenization, stablecoins, and AI finance on the agenda. The opening tension is concrete, whether HBAR can hold support while HederaCon turns attention into measurable demand. That matters for HBAR holders, developers, and enterprise users because they have to read 0.087 area and 200-day at 0.1177 before the full outcome is visible. The first read should stay tied to those facts, not to broad crypto mood or an unsupported forecast. The baseline starts with this. Citi, Euroclear, DTCC, and White House Crypto Council participants were listed for the event. McLaren and FedEx were also described as additions to the Governing Council in 2026. The measurable anchor is 0.087 area, while 200-day at 0.1177 gives the story its structure. The related signal is May 4 event, which keeps the story tied to a specific mechanism instead of a vague market reaction. These details set the boundary for the rest of the segment. What is confirmed, who is exposed, and which checkpoint must arrive before the next read changes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is enterprise participation can support the network story, but price still needs volume and trend confirmation. In plain English, announcements create attention only if users, developers, or institutions turn them into activity. That matters because whether conference attention becomes network demand depends on the mechanism working as described, not on a headline alone. If a viewer misses this mechanism, the story can look like ordinary volatility or routine announcement traffic. For Hedera, it is really a test of HederaCon week and whether buyers reclaim 10 cents with volume. If that condition does not appear, the setup stays conditional rather than confirmed. The direct impact lands on HBAR holders, developers, and enterprise users. HBAR traders are weighing adoption headlines against support near the 0.085 to 9 cents area. The chart has been compressing, which means the next move depends on support holding or buyers reclaiming higher levels. This is where the story becomes practical, because it changes whether conference attention becomes network demand rather than only the mood around Hedera. The affected side does not need a grand market narrative to feel the consequence. It needs clarity on 10 cents reclaim. That is why the impact scene stays focused on the user, trader, protocol, regulator, or institution actually named in the facts. The unresolved part is the ETF proposal, and HederaCon follow-through remain unresolved triggers. That does not prove that event attention will translate into sustained HBAR demand. The evidence that would clarify the gap is new production use cases, ETF progress, or a reclaim of the 10 cents area. This boundary is not a formality. It is the difference between the confirmed event and the outcome people may already be trying to price. Without that proof, range-bound price action remains a live risk, even if the first reaction looks confident. Until that evidence appears, the confirmed event and the expected outcome have to stay separate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The final test is whether HBAR can hold support while HederaCon turns attention into measurable demand. How high should be judged by that trigger, not by the loudest forecast attached to it. If buyers reclaim 10 cents with volume, the story gains confirmation. If support near 0.085 fails, attention shifts back to range-bound price action. The useful close is to track 0.087 area, 200-day at 0.1177, and 10 cents reclaimed together, because one signal alone can misread a conditional setup. For Hedera, enterprise attention needs price confirmation.